July meeting, and let me tell you, it reads less like a policy document and more like a family group chat where nobody agrees on dinner. Half want Thai, half want pizza, and Jerome Powell's just sitting there saying, let's wait and see if DoorDash has surge pricing. The Fed left rates at 4.25 to 4.5%. That's the same level it's been sitting at, like your ex who still hasn't moved out of their parents' basement. Most of the Fed wants to stay restrictive. The translation here is they're not ready to give Wall Street the sugar rush of a rate cut yet. But here's the twist. 2 members actually voted to cut right now. That's like showing up to a Weight Watchers meeting and someone brings cupcakes. The hawks are screaming inflation is sticky, and the doves are whispering the job market is cracking. And Powell is basically hosting America's most boring reality TV show, The Real Bankers of DC. Now let's go ahead and talk about inflation. The Fed says tariffs are pushing good prices up. Services inflation's cooled a bit, but tariffs, they're like that one uncle at Thanksgiving. They show up late, ruin everything, and somehow you're the one paying the bill. Some Fed folks think tariffs are a one-time thing, like a hangover. Others think it's more long, like COVID. Sticks around, maybe makes you miserable, and there's no clear cure. Either way, Powell's got a problem. He can't tell if prices are running hot because of economics or politics. Now, the labor market is still solid on paper, but under the hood, it's coughing like a 98 Honda. Unemployment's 4.1%, which sounds great, but job growth is slowing, wage gains are fading, and employers are acting like they're on Tinder, not hiring, not firing, just waiting to see what happens. Some Fed members are worried the job market's softening. Others say immigration is lower, so fewer workers means fewer jobs needed. That's basically the Fed's way of saying, we don't really know what's happening, but hey, pass the charts. And of course, no Fed minutes would be complete without a little fear porn. The Fed flagged elevated valuations in tech, hedge fund leverage, and wait for it, stablecoins. That's right, the Fed, the same group that still sends faxes, is worried about crypto pegged to the dollar. Jerome Powell probably thinks Dogecoin is an actual dog. And hedge funds, the Fed basically said these guys are overleveraged, drunk on AI stocks, and one margin call away from turning Wall Street into a garage sale. Now, here's where it gets a little bit fun. Powell's in the middle of the world's worst balancing act. On one side, Trump tariffs are juicing inflation like Barry bonds in 2001. On the other, job growth is slowing, and people are whispering the R word, recession. Powell keeps saying wait and see, which, by the way, is Fed speak for we have no clue either. And markets, they're still pricing in a rate cut by September. But the odds dipped after hotter inflation prints. Basically, Wall Street's gambling on whether Jerome Powell blinks before the economy sneezes. So, where does this leave us? Well, the Fed's framework review is coming. They're rewriting their mission statement, and Powell's about to give his last Jackson Hole speech on Friday. That's like the season finale of your favorite show, except instead of dragons and sword fights, you get charts and policy jargon. Markets want cuts, the Fed wants patience, inflation wants to stick around, and the job market, it's the wild card. September's meeting is going to be like the heavyweight fight nobody paid for, but everybody's forced to watch. Kind of like Jake Paul and Gervonta Davis coming up. So to sum it up, inflation's sticky, jobs are wobbly, and Powell's stuck in the middle like a divorced dad trying to keep the peace at Christmas. Will he cut? Won't he cut? Stay tuned, because apparently the Fed thinks suspense is bullish. Thanks for coming. I'm your host, Max Pitts. This is Trades and Gains and Investor Central Club. Make sure you like, subscribe, do all that good stuff if you enjoyed this, and I will see you guys in the next one.